The screen you are looking at is lying to you. It is a digital hallucination orchestrated by a dying system that is desperately trying to hide the most catastrophic accounting error in the history of modern finance. You see a number, you see 74.64, you see a red candle flushing down 4%, you see panic, but you are looking at a ghost. That price is a fiction. It is a memory of a market that ceased to function at 8 a.m. this morning while the retail herd is being slaughtered in the futures market, panicked by a margin flush designed to strip them of their positions. The real money, the dark money, the sovereign money, is doing something entirely different. They are not looking at the COMEX in New York. They are staring at an arbitrage gap so wide it threatens to swallow the entire Western banking system whole. Look at the spread. It's not just a gap, it is a fatal wound. In Shanghai right now, metal is changing hands at $86. In New York, they claim it's worth $74. That is a $12 discrepancy. In a functional market, arbitrage bots would close that gap in milliseconds. They would buy New York and sell Shanghai until the prices matched. But they aren't. The gap is widening. Why? Because you cannot arbitrage a phantom. You cannot ship paper contracts to China. The Shanghai Exchange demands physical bars, heavy industrial-grade bars, and the New York vaults are effectively barren. The paper price is crashing because the paper market is liquidating, but the physical price is ripping higher because the physical world is starving. We are standing on the precipice of a default event that will redefine wealth for the next generation, and the architect of this chaos isn't a hedge fund manager or a central banker. It is a single signature on a document that 99% of the world ignored. You have to understand, we are not just watching a market correction, we are watching the collision of two unstoppable forces, the re-industrialization of the American war machine and the weaponization of the Chinese supply chain. And sitting squarely in the blast zone is Executive Order 14346. When the administration invoked the International Emergency Economic Powers Act, they thought they were being clever. They placed a firewall of tariffs around the United States, 100% on EVs, 50% on solar, tariffs on steel, aluminum, and semiconductors. The goal was noble. Force the factories to come home. Make it in America or don't sell it in America. But they forgot one variable: geology. The United States is a resource pauper when it comes to the one metal that makes the 21st century function. We do not have the silver. We have the factories, we have the labor, we have the capital, but we do not have the conductivity. This chart represents national suicide. The red line is what we consume: missiles, satellites, medical tech, and the massive new solar arrays in the Mojave. The blue line is what we dig out of the ground in Nevada and Idaho. The gap is 7,000 tons wide. 7,000 tons of silver that must be imported every single year just to keep the lights on. The administration knew this. They saw the math. So in Annex 2 of the trade deal, they carved out a loophole. They made silver bullion tariff-free. They essentially told the world, we will tax your cars, we will tax your chips, but please, for the love of God, send us your silver tax-free because we are desperate. But here is where the trap snaps shut. The rest of the world isn't stupid. They read the Federal Register too. On January 1st, 2026, China didn't just get mad about the tariffs, they got strategic. They implemented the Strategic Resource Export Control Protocol. They looked at the U.S. desperate for silver, and they locked the gates. That $12 premium in Shanghai is the sound of a door slamming. It is the cost of exiting the Chinese ecosystem. They are paying a premium to keep the metal inside their borders, because they know that without it, their own solar dominance ends. So now you have a biflationary nightmare. The cost of finished goods in the U.S. is skyrocketing because of tariffs, driving consumer inflation through the roof. But the raw material needed to fix the supply chain, the silver, is being hoarded by our economic adversaries. This creates a vacuum, a black hole in the center of the American industrial base. Imagine you are the CFO of a defense contractor or a solar manufacturer in Texas. You just spent billions building a factory because the executive order told you to. You are ready to produce. But you call your bullion supplier to get the silver paste for your photovoltaics, and they tell you there is a 6-month wait. They tell you the price on the screen is $74, but if you actually want the metal delivered to your loading dock, it's $100, if you can find it. This is the force majeure scenario. The paper price becomes irrelevant. The spot price is for speculators. The real price is the price of survival. The panic is already happening behind closed doors. We are seeing off-market transactions, massive block trades happening directly between miners and tech companies, bypassing the COMEX entirely. Tesla isn't buying futures contracts, they are buying mines. Samsung isn't hedging on the CME, they are securing physical stockpiles in safe jurisdictions. The big players are exiting the public markets because they know the public markets are broken. They are leaving you, the retail trader, to fight over the paper scraps while they secure the physical inventory. And this is why the drop to $74 is so insidious. It is a liquidity flush engineered to shake out the weak hands before the repricing. The banks are short. They are naked short massive amounts of silver. They need the price to drop so they can cover their positions and go long before the default becomes public news. They are creating a controlled demolition of the price to hide the fact that the vault door is open and the room is empty. But the pressure is building from a third angle, one that hits your wallet directly: the currency itself. The Federal Reserve is trapped in a cage of its own making. The tariffs are inflationary. Prices are rising. Normally, the Fed would hike rates to crush inflation, but they can't. If they hike rates, they kill the re-industrialization boom the president is trying to build. High rates make borrowing expensive, and you cannot build new factories with expensive money. So the Fed has to keep rates suppressed. They have to let inflation run hot. They are sacrificing the dollar to save the factory. This is financial repression 101. Your savings are being debased to subsidize the trade war. And in a world where the currency is losing purchasing power at 10% or 15% a year, where do you hide? You hide in the asset that is essential, scarce, and legally exempt from the tax regime. You hide in silver. The government has inadvertently signaled that silver is the only safe harbor. By making it tariff-free, they have admitted it is the one thing they cannot afford to tax. They have anointed it as the ultimate strategic asset, and the market is just starting to wake up to this. The gold-to-silver ratio is the tell. Gold is doing its job. It's at all-time highs, sniffing out the currency debasement. But silver is lagging. It is coiled like a spring. When the industrial panic meets the monetary panic, the ratio will collapse. We are not talking about a gentle rise. We are talking about a violent repricing where silver moves $10, $20 in a single session. Look at the history. Every time the ratio stretches this wide during a supply deficit, it snaps back with ferocity. We are looking at a move to $150, maybe $200 an ounce, just to restore historical equilibrium. But this time is different because the technology demands it. You cannot thrift silver out of the new TOPCon solar cells. You cannot build a Tomahawk missile without it. The demand is inelastic. That means the price can go to infinity, and the military will still pay it. The solar companies will still pay it, because the alternative is bankruptcy. So what happens next? The window is closing. The divergence between the paper price and the physical price will reach a breaking point. It will likely happen on a Friday afternoon. The exchange will announce that due to logistical irregularities, delivery settlements will be made in cash, not metal. That is the default. That is the moment the paper price goes to zero and the physical price goes no offer. It means you cannot buy it at any price. It means the market has gone dark. We are watching the last few frames of the movie before the projector burns out. The drop to $74 is a gift. It is the system giving you one last chance to trade your depreciating paper currency for the most critical industrial metal on Earth at a discount that shouldn't exist. The Shanghai traders know it. The Mexican miners know it. The strategic planners in Beijing know it. The only people who do not know it are the ones staring at the red candle on their screen, paralyzed by fear, waiting for the news to tell them it's okay to buy. By the time the news tells you to buy, it will be too late. The spread will be closed. The vaults will be locked, and the price discovery mechanism will be broken forever. This is not a trade. This is an exit strategy from a failing monetary order. The executive order was the starting gun, the Shanghai premium is the warning siren, and the empty vaults are the reality. Do not let the paper price shake you out of the only asset that actually matters. The storm is not coming. The storm is here. The only question is, do you have a lifeboat, or are you still trying to swim upstream?